Hello everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of August the 14th, 2017. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, we can assess here that based around the VantagePoint indicators, the US dollar continues to struggle. Now, we've got our CPI data's come out. It's come out very soft on Friday. So, in my respectful opinion, it's very unlikely that we're going to see another rate hike this year. So, it is likely to keep pressure on the US dollar. Now, our key VantagePoint level comes in at 93.53. We can see we have had multiple failures on this critical VantagePoint level. We've actually had 4 failures in the last 6 trading sessions. Our predicted short, medium, and long-term differences, along with our neural index, have all turned back down to the downside. Predicted MACD is where it's holding below the zero line for some period now. And a more significant thing we can look at using the VantagePoint indicators is, of course, the predicted RSI. Now, we've had a corrective move. I've talked about this for the last several weeks, that the US dollar is in an extreme oversold condition. It needs to correct itself. It's done that. We have failed at the 50 level on the predicted RSI, and now we're moving back below the 40, suggesting the trend down is likely to continue. Now, the dollar could see some strength here, guys, with the North Korean conflict. That could keep fueling, money moving into the dollar, into the yen, into the Swiss franc. So that is definitely something we want to keep our eye out. But for now, the dollar, again, until we can make a sustained break of 93.53, this critical VantagePoint level, then all pressure remains to the downside. We can also further assess here. We have a trend line that's coming in basically right above the VantagePoint 18-day predicted moving average, further confirming the dollar is struggling. But again, the North Korean conflict is something we want to watch. Now, when we take the dollar index and we bring that into our Euro-US currency using the same indicators from VantagePoint, we can assess that as the dollar index could not break above that key VantagePoint level, Euro-US could not break below the key VantagePoint 18-day predicted moving average. Now, in last week's Forex Weekly Outlook, I talked extensively about my position is that we're going to come down from this top, correct lower to this critical VantagePoint level right here, and then we're likely going to go higher. That has come to fruition. Now, our neural index, our predicted differences, all starting to move higher. The predicted MACD is still a big concern for me, though, as it still points down, but we're holding above the zero line. So we could see further corrective move in the euro, but I think that's unlikely. Now, our predicted RSI, again, has hit heavily overbought territory, come down, bounced off that 50 level, and now we're back above 60. So when we look at these indicators from VantagePoint, it still has us buying Euro-US while above that critical VantagePoint level, which now comes in at 117.13. As we move into the US Swiss franc, again, almost an identical trade to Euro-US. The Swiss franc is actually broken away to the upside on the equity rally, but the second the equity rally cooled off, the North Korean conflict started to accelerate. The money went back into the Swiss franc. Now, we're closing below 96.47, that critical VantagePoint 18-day predicted moving average. And again, if we look at those VantagePoint indicators, our medium term crossing over our long-term predicted difference in the opposite direction in which the market's moving has basically given us a 3 to 4 day warning sign, that this particular pair was getting ready to move lower. Now, our zero line in the predicted MACD, we're still holding above that, but we can see that there is potentially a crossover on that predicted MACD taking place right on that zero line. So if we make the cross on the VantagePoint trigger and we break below the zero line, then US Swiss franc is likely to move lower. Now, we don't have the same kind of momentum that we have with the Euro-US pair. We can see that we're holding at 44.08. A break of 40 will see this pair accelerate, and again, a good indication of a past move from VantagePoint that has shown us, the same thing. If we follow that down, you can see that triple EMA cross to the downside combined with the predicted RSI led to a fairly substantial move from 97 all the way down to the 90, just above the 94 level. So it does look like that potentially we could be getting to repeat that cycle. But the month of August is a very thin, illiquid trading month. Probably one of the slowest months of the year in the final couple of weeks of August. So keep that in mind, guys, when you're either buying or selling this particular pair. Now, as we come into the pound dollar, the pound's come under further pressure. Of course, a lot of that came from the Bank of England, but the VantagePoint indicators are basically warning us that we may not have a lot of downside here. Now, we've got a potential bottom forming here at about the 129.50 level. If this level continues to hold, we can see that the neural index is turned back to the upside. We remain above the zero line on the predicted MACD, but our predicted RSI still basically below 40. But I would watch this level very, very closely. Now, on the upside, 130.36, the 18-day predicted moving average from VantagePoint, if that level can hold, then we will see further downside on the British pound. But if we break above 130.36, stay above that level, this pair is potentially getting ready to reverse back towards our range top around the 133 level. Now, again, a lot of data coming out next week with the British pound, but the data that we really want to watch next week is the FOMC minutes on I believe it's on Wednesday afternoon. That is the announcement that really will set the tone for the dollar and potentially the British pound for the rest of the week. Now, with the dollar-yen pair coming into the dollar-yen, again, this is a very, very choppy pair. It's responding to a risk-off environment. The equity's selling off, dollar-yen moving lower, but you can see that based around the VantagePoint indicators that essentially we're basically running 15 to 22 days in either direction on this pair. Once again, guys, this has absolutely nothing to do with Fibonacci, Elliott wave, or any of this stuff. What it has to do with basically is monthly institutional flows that come in and out of the dollar and in and out of the Japanese yen. So right now we're getting a little bit overdone on this particular rally. We're in and around that 20-day mark that we've been moving lower. So we should be watching the VantagePoint indicators very closely for a potential reversal back to the upside. Now, if everything cools off here with North Korea and Trump maybe gets off Twitter for a little while, then that should pretty much calm things down, and we could very quickly see the dollar yen move back towards the VantagePoint key level, which is, coming in at the 110.60 area. So this move, the further we move away from the 110.60 area, the more likely it is we're going to return to that level. Now, the yen is usually strong towards the end of August. So this is somewhat of a yearly cycle here, so we'll take that into consideration. But for now, we want to watch this 109 area very closely. How much further do we go lower? But again, if we look at these VantagePoint indicators and we bring it up, if I look at this over the last 6 months, you can see a very clear cycle here where we're going down for about 15 to 20 days, then up for 15 to 20 days, then back down again, then back up again, and then here we are down yet again. So this is a very repetitive cycle that again, in most cases here, guys, nothing goes straight up and nothing goes straight down. We tend to run out of buyers at a certain point, or we run out of sellers where they're taking profit and they just simply don't want to take the risk of shorting it at this level. Doesn't mean that the dollar yen can't go lower, but it certainly does suggest that this particular move could stall out just above the 108.50 area. Now, as we come into our three main commodity currencies, they of course have all been under pressure in a risk-off environment. When we look at the USCAD, we've had a nice move back up to the upside, but after that weak CPI data on Friday, coming out of the US, the Canadian dollar managed to gain a little bit of ground on the US dollar, but I don't think it's out of the woods yet. My concern here for further longs is this signal we're seeing, the medium term crossing over the long term predicted difference in the opposite direction in which the market's moving. So these VantagePoint indicators are absolutely critical in our trading. So the key level we want to watch this week, 126.57. We're closing at 126.63. If we can manage to close above this area Monday and Tuesday, then longs are looking quite good for US Canada. But if we can't hold above 126.57, then the US Canada pair will resume its downtrend. That's what we want to look at here, guys. That's pretty much our line in the sand, but we always want to make sure that line in the sand is drawn on the closing price. So for now, we're holding, but just barely above that key level. The indicators are very, very mixed here, but we're still sitting above the 50 on the predicted RSI. Predicted MACD has not cleared the zero line, so this move higher could very well be corrective in nature. But again, guys, know your levels, and that makes life a lot easier. Now, the same thing will apply to Aussie US and New Zealand US. Our key vantage point level 78.89, but pretty heavy support down to the 77.80 mark. Gold's still moving higher. If gold's moving higher, chances are Aussie US is going to move higher. So will New Zealand US. Now, our indicators are very, very mixed here. They're basically running sideways. So what I would be doing is, again, we're closing pretty much right on that key vantage point level, 78.88. So we want to give it Monday and Tuesday, see if we can close back up above 78.89. If it does, then Aussie is likely to continue its very strong upward move that we've had basically over the last 6 months or so. So when we look at this chart over the last 6 months, you can see, particularly in the last 3 to 4 months, this pair has been gaining a lot of ground here. So we don't want to lose sight of that here, guys, that this move could be, again, just corrective in nature. Same as New Zealand US here, guys, basically the exact same trade. New Zealand taking a little bit more of a hit here. The key level there, 73.68. We're closing at 73.09. So clearly of the three commodity currencies, the CAD and the New Zealand are the weakest. The Aussie is the strongest. So if you're buying these commodity currencies, in my respectful opinion, Aussie is probably the way to go.